Welcome back to our weekly newsletter on the economy, where we bring you the latest updates on business and economic trends. Today, I will take you on a journey through this week's newsletter. To receive our weekly newsletter and stay informed on the latest economic developments, simply follow our website in the description below. Welcome back. Let's get started. In the Netherlands, the economic landscape faced a challenging year-end. Bankruptcies soared by over 50% in 2023, with a notable increase of 30% in December alone. The total for the year reached 3,000 and more, marking a stark contrast from the previous year. The economic ripples are certainly felt, and this trend has been on the rise for over a year. Now shifting our focus to China, where under the guidance of the Central Committee of the Communist Party, the national economy rebounded impressively. In 2023, industrial production in China saw a robust growth of 4.6%, contributing to an overall GDP increase of 5.2%. Key sectors such as agriculture, industry, and services all played a role in this remarkable recovery. On the other side of the globe, the United States experienced a surge in consumer sentiment, reaching its highest levels since July 2021. A 13% jump in January 2024, coupled with optimism regarding improved inflation and income expectations, contributed to this significant boost. Turning our attention to the Euro area and the EU, there is a notable downturn in the construction sector. Production in construction dipped by 1% in both regions. Economic dynamics continue to fluctuate, impacting various sectors. And shifting gears, the International Monetary Fund issues a warning regarding the U.S. commercial real estate market. Despite investor hopes for a soft landing, challenges persist. Rising interest rates have led to an 11% drop in prices, erasing gains from the past 2 years. The sector grapples with evolving trends, including teleworking and e-commerce, reshaping demand for office and retail spaces. Now, let's talk about tech. The industry faces ongoing workforce reductions in 2024. Major players like Google and Amazon are implementing layoffs, driven by a need for streamlined operations amidst artificial intelligence advancements and post-COVID adjustments. Canadian firms see an opportunity to attract talent, but the industry anticipates potential hiring increases later in the year as interest rates ease. Now in Turkey, the agricultural IPI experienced a notable increase of 1.44% compared to the previous month and significant surge of 38.82% compared to the same month of the previous year. Agriculture remains a pivotal sector, showcasing robust growth. Shifting our focus to Belgium, the unemployment rate in November 2023 stood at 5.3%. Meanwhile, the employment rate for individuals aged 22-64 reached 72.2%, according to the provisional results from the Stat Bill. Breaking news from the OECD. The third quarter of 2023 reveals record high employment and labor force participation rates. Stabilization at 70.1% and 73.8% respectively marks a significant achievement. Notably, gender parity and the regional variances play a role, with some countries like France, Italy, and Japan leading the way. Turkey, however, maintains the lowest employment rate at 53.9%, and in November 2023, the OECD unemployment rate remained at a historic low of 4.8%, showing stability in the European Union and the Euro area. The World Trade Organization sheds light on the high demand for energy-related critical minerals, creating supply chain pressures. The global trade dynamics for these vital minerals reach $378 billion in 2022, with China leading as the largest importer and Chile as the top exporter. According to the World Bank, there is a forecasted 5% decline in metals prices for 2024. The metals and the minerals price index experienced a 0.13% decrease in the third quarter of the last year, so reflecting a trend of decline since early 2022. Factors include economic slowdown, supply growth, and risks such as weaker demand from China and the advanced economies, production disruptions, trade restrictions, and conflicts. Nickel is expected to see the largest price decline. Austria's inflation reached 5.6% in December, primarily driven by increase in the cost of fuel and electricity. The consumer price index rose to 122.6 points, indicating a 5.6% increase compared to the December 2022. Turning to Bulgaria, the December inflation report indicates a 0.3% rise in the consumer price index, with an annual rate hitting 4.7%. Economic indicators continue to shape the landscape in various regions. A special report on escalating war risks and their impact on marine insurance. Conflicts, particularly those involving Yemen's Houthis and disrupting global shipping routes. The Red Sea and the Suez Canal have seen attacks, leading insurers to reconsider coverage. War risk premiums are rising, affecting shipping costs, and the need for specialist war insurance is growing. Adjustments in policies, including coverage reviews, are expected as the situation unfolds. S&P's flash PMI data brings positive news for Japan's economy as the private sector returns to the growth at the beginning of 2024. The composite PMI rose to 51.1, signaling GDP growth of around 1 to 2%. And the services led the expansion, showing the fastest growth since September 2023, driven by increased new businesses and foreign demand. However, challenges persist in manufacturing, which contracted for the 8th consecutive month, though at a slower rate. Forward-looking indicators hint at potential divergences between manufacturing and the services in the coming months. In the Czech Republic, agricultural producer prices experienced a significant 19% year-on-year fall, contrasting with a 1.4% year-on-year increase in industrial prices in December. These indicators provide insights into the dynamics of Czech economy, highlighting variances between agricultural and industrial sectors. Examining Luxembourg's economic landscape, 2023 witnessed a 7% drop in bankruptcies, with 935 declarations. However, challenges persist as job losses surge and industrial variances create a complex economic scenario. Understanding these challenges is crucial for navigating Luxembourg's economic trajectory. And it has delved into the reasons behind the high inflation in Central and Eastern European Euro countries. What is the reason of high inflation there? A combination of global shocks and domestic factors, including disruptions in supply chains, supply-demand imbalances post-COVID-19, and the impact of the Russian invasion of Ukraine contributes to vulnerability. Factors like energy intensity depends on Russian energy, and domestic elements such as tight labor markets and robust wage growth play significant roles in driving inflation. The IFO Institute revises Germany's growth forecast for 2024 down to 0.7%, citing budgetary constraints. The adjustment from the earlier prediction of 0.9% is driven by additional savings of nearly 19 billion euros in the federal budget. These measures necessitates by a constitutional court ruling impose increased burdens on the companies and households, coupled with reduced government spending. China strategically shifts its investment focus to Latin America, injecting $187.5 billion between 2003 to 2022. With a keen eye on technology, renewable energy, and critical minerals, China's investments target sectors like telecommunications, financial technology, and energy transformation. Brazil leads in receiving investments, followed by Peru, Mexico, Argentina, and Chile. This strategic move aligns with China's goals of diversifying natural resource access, expanding markets, promoting multilateralism, and diplomatically isolating Taiwan, shaping a new era in Sino-Latin American economic relations. And now Turkey's consumer confidence index records a significant rising by 3.9% in January to reach 80.4, up from 77.4 in December. The index, calculated through a collaborative consumer tendency survey by the Turkish Statistical Institute and the Central Bank of Turkey, reflects positive sentiments among consumers, indicating potential impacts on spending and economic activity. A survey in Slovenia reveals that 44% of accommodation enterprises invested in online advertising, while a substantial 72% faced hurdles in digital transformation. This snapshot of the Slovenian business landscape provides insights into the ongoing digital challenges and opportunities within the accommodation sector. The International Energy Agency forecasts a record high in global electricity generation from nuclear power in the coming year. Global electricity demand saw growth of 2.2% in 2023, with China playing a pivotal role here, and the renewables are set to surpass coal in providing over one-third of global electricity generation by 2025. Anticipated declines in global CO2 emissions from electricity generation in 2024 and the projected growth of nuclear power, particularly in Asia, showcase evolving trends in the energy landscape. The OECD Economic Survey of Italy provides key recommendations for the nation's economic trajectory. To boost long-term growth, Italy is advised to focus on improving the business environment, strengthening competition, managing public finances, and embracing the green transition. The survey forecasts a growth rate of 0.7% for Italy in 2024, with a gradual decrease in inflation. The Eurozone experiences a contraction in business activity, reflected in ACOBC's composite PMI, standing at 47.9 for January. Despite an improvement in manufacturing, the overall decline is driven by a steeper fall in the services industry. Germany and France, the largest economies in the Eurozone, witnessed mixed PMI results, underlining the nuanced economic landscape. And now, lastly, Croatia sees a remarkable surge in retail trade turnover in November 2023, marking the highest annual increase since October 2021. The real terms adjusted turnover records a 1.2% increase from October, with a notable 7.3% rise compared to the same month in the previous year. And these figures indicate a robust performance in Croatia's retail sector, reflecting positive economic momentum. That wraps up our economy newsletter for today. We covered a wide range of topics. Stay informed and tuned in for more economic news in our upcoming episodes. Thank you for watching and remember to subscribe to our channel for the latest updates.